Hello, everybody. Welcome to another episode of the Stock Screener. In this video, we're going to do a comparison between Capstone mining, which has been doing very well, and Copper Mountain. So both are copper producers. Capstone mining has more silver and iron, and Copper Mountain has a bit of gold. So let's see which of these two are the best copper mines. Let's take a look at the market cap. So we have 2 billion at Capstone, and at Copper Mountain we have 700 million. So that's about 1/3 of the Capstone market cap. So probably every metric here will be 1/3 of Capstone. Let's see if that is true. Let's take a look at the equity. Equity is at 900 million, and here we are at 300 million. So that's 1/3, correct? Then we go to the price to book value is 2, and here it's also 2. So both are equal on equity level, not too cheap, but also not too expensive price to book value. Capstone has 44 million cash. Copper Mountain has more cash. But we also see that debt here is at 500 million, so that's the total liability. But at Copper Mountain, we have about the same amount of debt. So this is a huge red flag. So you can see that the debt at both companies are about the same. But Copper Mountain has less equity. So we have a debt to equity that's very high. Debt is higher than equity. And here at Capstone, debt is lower than equity. And also Capstone doesn't have any long-term debt. You can see here no long-term debt, while Copper Mountain has 120 million long-term debt. So they will need to make sure to get rid of that debt somehow. And Capstone Mining has a very good partner for that. They have Wheaton Precious Metals. So they have actually given Capstone some money, and they were able to get rid of this long-term debt. And that's gone into the deferred revenue to Wheaton Precious Metals. So from a balance sheet perspective, Capstone Mining is definitely better than Copper Mountain. Let's take a look at the earnings. We have 300 million earnings per year. So that's about a PE of 5.6. And here we have earnings of 140. That's a PE of 4.7. So that's better. We have more earnings compared to the market cap at Copper Mountain. So that's a good thing. EBITDA, we have 600 here. That's a price to EBITDA is 3. And here it's also better, it's 2. So Copper Mountain has more earnings than Capstone at this moment. So yeah, bad balance sheet, but good earnings. Now let's take a look at the mine life. Only 20 to 15 years. They have one mine and one project in Australia. One mine was, I don't know where, in Canada, I think, and then the other one is in Australia. Now, Capstone has 2 mines, 30-year and 20-year, and the project is 24 years. So they have 2 mines and a third one is coming online. So we can see that the mine lives are better at Capstone mining, and here the mine lives are shorter. So I would prefer to have longer mine life. Now the capex is 1.5 billion and market cap is 1.9. So that's a little bit less than the market cap. Here the same, 700 and then 400 for the building of the mine, the project. The problem is this 400 million capex has not been financed yet, while at Capstone Mining they have already had a streaming agreement with precious metals. They're also going to find a partner and they will have a good balance sheet with low debt, so they can easily take out a loan of 500 million, and yeah, the balance sheet can add more debt to that because they don't have any long-term debt. So this project is more likely to get in construction than this project because they have loads of debt on the balance sheet. So from a project perspective, I think Capstone Mining is doing better than Copper Mountain. Also, this project is going to start construction this year, while Copper Mountain, I think they will start next year. So Capstone will be faster to the market. Let's take a look at the costs. Costs will go down from 2 to 1.5. And at Copper Mountain, they will stay around the same at $2. So that project here, what was it? The EVA copper project has about an AISC of $2. And I thought a 15-year mine life. You can see here what the parameters are. And at a copper price of 4.5, we have an NPV of 1.2 billion. So that's very good, very high leverage. The problem is that it's a very high cost project at $2. So you have a bit of copper risk here. If copper goes down, then this project could get into troubles. While the Santo Domingo project has an AIC of 1. Okay, so 1 plus the other mines will give an average of 1.5 AIC. So the costs are getting lower here, which is very good. So you have less risk here to the copper price than here, because here the costs are higher. Let's take a look at the production numbers. 180 goes to 450. That's 2.5 increase. The same here. 100 to 2.5 increase. So both companies seem to be about the same, except that everything is smaller at Copper Mountain. Let's take a look at the financials. Here you can see that they were not making money last year, but they are now having good margins, 30% margin. And at Copper Mountain, we now have net earnings that are positive. Revenue is about here, 127. So this is about 20% margin. Profit margin is 70 and this is 130, so 50% margin. It's very good. So this is a very good business. Let's take a look at the long-term chart. If we take, for example, 6.5 copper, 6.5 copper, then we can have an upside from 1.8 billion to 11 billion. So that's an upside of, let's say, is it 6? Yeah, about 6-fold when the project is built. And for Copper Mountain, I did the same calculation with a 6.5 copper price. Then we go from 670, let's say 700, and we go to 5,600. So that's about 8-fold. Yeah, about 8-fold. So they are about the same, okay? The upside is about the same. 7-fold increase in about 2-3 years. The only thing is Capstone is more likely to be able to construct this project because everything is done. We have Wheaton Precious Metals supporting the project. It's almost financed, just a little bit of debt financing and a partner, and then we can start it. So this project is most certainly going to succeed, while the Copper Mountain project, the EVA copper project, has a pretty high capex for this small company. Capex is even higher than the equity, so that's typically not a good sign. And it's not financed yet. It's a very high cost project, $2 copper. So I'm not sure if they are able to finance this. So this could take longer than 1 year to get into production. I mean into construction. And then we still have 2 years of construction to get to our target here. So this is a comparison between these two. And I think we should stick with Capstone because this is a company that has less risk, a better balance sheet, better partners, lower costs, and it's also a higher market cap. So if you take a larger company that's typically less risk, they also have 3 mines and this only has 2 mines. So you have less risk that something could happen at one of those mines. So this is what I think. If you have any comments, you can leave it here under the video. But I think that Capstone is superior to Copper Mountain. And I'll see you in the next video.